Okay, good evening, everyone. Today's date is the 3rd day of November 2023. Today's date is Friday, and we just concluded NFP. I just want to do this video. I will run through some very fast. I just want to do this video to help corroborate my yesterday's um, analysis on the video uploaded yesterday on the 2nd of November 2023. So it's just a quick rundown, and I'll just be looking at gold, EURUSD, GBPUSD, Bitcoin, and probably check NASDAQ and show you what is happening. I didn't want this video to be too long. Remember, if you watched that video yesterday, I was talking about NFP today, and the prediction yesterday was very, very, very easy and simple. And if I can go to today, NFP, I was talking about dollar, the NFP that is the forecast yesterday was 180,000 jobs, and today it even came lower. So definitely all assets will definitely do what rise against the dollar, as I gave the analysis yesterday. The weekly chart of gold. So today, let me see if GBP can come up. Okay, GBP came up today. I was talking about this yesterday. If you took that trade, congratulations to you. But I am not in any currency pairs for now because I'm not in any currency pair for now because I'm in a trade on gold already from 1,820 and $816 already. So I've pretty much exhausted most of my portfolios, but except I'll probably just add more positions because I'm in massive profit on gold already, and EURUSD, GBPUSD, and the other currency pairs were not giving me what's it called, more windows to enter because it has been consolidating for the past 1 month. So just first of all start with EURUSD. Let me start with EURUSD so that definitely you can see what is happening. So for me, I'll be shorting EURUSD. I'm still selling you. I'll be selling EURUSD with these. What's it called? The reason why I'm selling EURUSD, that's what I'm trying to explain. It might turn to a bullish market from here, but I have a reason for selling. Today is Friday, and the market is pumping because of the NFP that came out today, and I was telling you yesterday that it's going to come out negative. So if you want to do anything today, definitely, if you are trading today, you should be buying all other assets. I said it yesterday in my video yesterday. If you follow that video upward, but the reason why I will be selling, or I've given a signal on my Telegram group right now, I'm selling it because I am I'm a market structure trader. I don't, I'm a market structure trader. I'm looking for those big, liquidations before I can, what I can trade. This was a liquidation, the big liquidity on the higher time frame. So I don't want to go too much. Like I said, I just want to run down what I'm saying. So if you're a market structure trader, you understand why I am doing what I'm doing right now. So as it stands, according to a structure, I'll follow what my strategy tells me, not what the market is doing or what people do, everybody's doing. So according to the structure here, I'm a market structure trader and a price action trader. We had what is this called a bullish market. Sorry, let me come back again. We had a price action pattern. We had an ascending triangle that was broken down right now. So it's imperative that we'll come back, to the break of, that ascending triangle and try to, do what come down. Then the other reasons, I'll give you reasons. I'm giving you reasons why I would not be buying from even these areas. If I can drop down, I use my Farley chart to analyze, to train my structures very perfectly well. So everybody right now, because of NFP today, they are in this, position. And if I can take this off, they are, a lot of people are in a buy. If you watched my video yesterday, I said I want to make this as, clean and as simple as possible so that I can talk about each and every other asset, why I am not involved in any buy right now in any currency pair. So I'll use this and transfer it to my other assets also So what I know is that I bought from these areas and sold, bought, sold, bought again. When we go here, if you watch these analyses, is it going to be a fake out or not? That was when we started selling from here. Are you getting it? And since then, what happened? We broke down from the ascending channel, ascending triangle, broke down and took all the liquidities. If you watched those videos yesterday of taking out liquidity, so are we just going to take this liquidity and continue going to the upside? That's what we are, as in, that's why I'm running through this analysis. I believe that for us to break above that, I was break out of this same triangle the way we did here. I'm not saying us going back up just yet, except we do something called a drop-based drop strategy. I get it. I still believe we will definitely do what? Fall back to the downside, taking all this liquidity out again before any major move can start. Why I'm saying that is because we've broken out of a price action pattern to the downside like we did here. So if it must be a fake out, it needs to show me what's it called? It needs to, show me a bullish continuation structure for me to be able to involve myself in this market. So if I should take these things off, let's go into the immediate price action we'll have right now. I get based on the 4-hourly chart. And so see that I have drawn these what's it called? Ascending channel that 60% of the time breaks what to the downside. Are you getting it? Well, I think this is a liquidity concept. That is why they as in manipulating everybody to the upside, bringing buyers in, because a lot of people might be involved right now from these old areas or from these old areas are buying and putting their stop loss under here, underneath here. I believe they still want to do what the market manipulation, what's it called, concept before they take, what's it called. So this liquidity, I remember yesterday I was talking about, liquidating everybody that we actually selling to the downside first. This that happened here yesterday, I told everybody that we'll liquidate everybody today the upside, then liquidate people back what to the downside, taking all these early buyers out. And before you even consider what is happening right now, after every break of structure or every liquidity, the market tends to buy back into a Fibonacci retracement level. So if we can drive this market, I said I didn't want to talk too much. This was a low, this was a lower high. I guess in lower low, this was a lower high. So on that lower low again, we're bringing in on that lower high again before we get on that lower low. So if I can use a little wave 1, 2, 3, 4 cannot go above 1. I get that's 800, 1.0800. 4 cannot go above 1, then 5 will drop. So that's just, I think, a lot will happening to the downside using this liquidity concept we're about doing right now, bringing buyers in, I guess, then sluggishly, trying to show everybody that okay, it is an ascending triangle. You should start, selling from this area so that you put your stop loss above here, maybe tighter stop loss of 20, 50, or 100 pips. Take everybody out. Are you getting it to the upside first? Then take everybody down to the downside before going. This is how I understand structure, market structure. This is what I can say that I know about market structure. I get in as a market structure trader. So this is my concept. I would not, because of the pumps I'm saying, because of NFP and all those things, be shaking or lose focus about my structure because I'm a market structure trader and I'm a price action trader and I follow the money. I don't follow the crowd. I follow the money. I follow what these market makers are doing, what these big banks are doing. That's what I do. I follow the money. So to me, if I take these things off, I still think this is liquidity. I still think this is liquidity they are taking to the upside before doing what? Dropping the bomb to the downside to take everybody down at the downside out before they can do what? Try to find a switch and change character to the upside to come back probably to 1.1000. So this will be my buy and this will be my sell. So these are my two trades I'm setting right now. My first trade will be a short from 1 point from this area using a 250 pips to 1.0850. And the second trade, I'm even setting it at 1.900. I'll set my stop loss at 1.900 area. Are you getting that above these what's it called? This liquidity, above this price action pattern. Are you getting above this price action pattern? Here, then shut it down to take all these trades out to the downside. So if I should bring all my confluences I use in driving my market, I can categorically say that, okay, if I use my Fibonacci tools, I believe that we are in the Q zone to short to the downside because we broke out from what? An ascending triangle, and it's a bearish continuation pattern to the downside. Are you getting? So I brought out a lot of confluences I use. Are you getting it? A lot of confluences I use in making decisions in this market. Are you getting? So these are my confluences, my strategy. I put this, and this together. And aside from that, if I should bring in my RSI, which is part of my confluences also, the market is oversold, overbought already. Are you getting it? The market has been overbought already on the 4-hourly chart. Let me see if it's overbought on the daily. The market is yet to be bought on the daily. Are you getting it? It's yet to be overbought on the daily, but I don't buy from this area. I only buy from this area. I'm a swing trader. I'm not a day trader. Are you getting it? So it's either I buy from these areas. Are you getting it? Or I sell from this area. So without that, this RSI is part of my confluence also before I take it buy or sell. Are you getting it? I have what is called looking at my entire market, then following structure, following price action, using my 20 and 50 EMA, using my RSI. These are things I put together. I just want to corroborate the video I did yesterday, and I've even spoken more than the time I wish I would use in these, what's it called? So overall, where are we? Overall, I still think that this is what? This is, as long as we're not breaking above this last low or something like that, according to my strategy, I still think we're still going to come to the downside, because who do you want to leave all these things for? I will use GBPUSD to explain better why I am selling. Are you getting it? Because I use something called multi-asset analysis to be able to liquidity concept. Let me just even use the liquidity concept here to be able to, trade my market. So I follow the money, I don't follow the crowd. So whatever I want to happen, I don't care. What I know right now is that this is the last 4 hours of the day or the week. I get me. So what is going to happen has to start from now, this next 4 hours. So I follow the action of the price and what the price is doing, because I know that we've taken liquidity, and after taking all this liquidity of the what's it called? Okay, let me explain better. When the market breaks out from a particular price action chart pattern, it tends to come and take the last where the market started from, either from the upside or the downside. It comes to take it till as in what's called the last liquidity chest before buying back to the upside to probably a resistance level. Are you getting it? Or where the whole market started from. We must not break this to the upside. Now, this is part of my confluences also. This was where the whole what's it called, broke down from. So let me just say that 1.760 to 1.0800 must not break to the upside. The moment we are breaking this back to the upside, we change character to the upside. So these are all part of my, I get my what's it called? There are a lot of things I put together before I make my own decisions. A lot of things I put together. So I think most of the time I say my video will be too short. I just want to show you things you don't know already. Are you getting it? I use my confluences to make my decisions. As it stands, this is where this market actually started breaking down from again after breaking from the ascending triangle. So it's imperative that they bring, after taking this liquidity, buy all this liquidity that has been taken, will buy back to the upside. It took 1 month, but the moment we are breaking a lower high, are you getting it? Or breaking above here this market started shorting from. That is another concept. So there are a lot of things that you have to look at before making decisions in the market. As you have to be a price action trader, you have to be what's it called, a market structure trader. You have to look at all the liquidity concepts they will use, or liquidity tools these market makers are using to take people out without emotion. So you have to be very, 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 very good with this market before you can make some certain decisions. Are you getting it? And what I'm seeing here right now is that follow up. What is this? An ascending triangle that tried to break to the upside but faked out and broke back inside. So if you follow your chart patterns very well, you will not make some kind of mistakes you make in trading. I get it. And what happened on the flip side of this ascending triangle after the fake out? The market broke to the downside, did not fake out the way we faked out here. So for it to break properly, that means that the market does what is still in a bearish market. And we are not even seeing a change of character happening here yet before you start buying. Are you getting? So this on that strategy again, after taking this, the market will just come down, change character to the upside, come down, break above again, then find an entry around these demand zones, then we can start buying. That's another concept. So you have to have a lot of market manipulation or market structure concepts before you can call yourself a trader. Are you getting it? Before you can call yourself a trader or start trading, there are a lot of things you have to find out how this market and the waves of this market actually does move before you can, definitely find yourself in any market. Now, a lot of people are saying this right now, but they don't even know what next. What next is that if this market must continue to the upside with this, where are you supposed to be buying from? How does it work? You're supposed to know that, okay, this is liquidity. Are you getting it? That's broken to the upside. That's taking that liquidity to the upside. So the market needs to come and respect that broken, trend line to the upside. They continue going. But before I even enter, I usually wait for, my structure do what? After breaking, changing character to the upside, coming back to retest my whole demand zones. Are you getting it? Then continue. I still even want another break of structure to the upside before I take the fourth leg and enter to continue going. So there are a lot of ways you can look at the market, because that is the only way the market moves. That's the only way the market moves. Are you getting it? That's the only way the market moves. Now, as broken and it's continuing a bullish trend, even though it's sluggish to the upside. And to me, this is a sluggish move. Are you getting it? So there are a lot of things you have to look at. A lot of things you have to look at. Now, I'm saying that this area of demand will not hold. So if it does not hold, what happens? Breaks down and come and take these guys out. But a lot of people have been buying today now. They are buying. This is weekend. This is Friday. You are still buying. That is an error for me, because you are not studying the entire structure very well. Now, I'll transfer this to maybe GBPUSD to show you why I'm not even buying this. I'm not buying these, what's it called? This bullish move that is happening today due to NFP. I'm not buying it because I don't have any major demand zones for me to buy. I need three touches, at least three touches, for me to be able to convince that, okay, this market has a structure. So to me, this is a structure. This is my first structure, my second structure. I need to see that third structure before I can start buying. So definitely there is a kind of, I've seen, you have to study a lot of structures, probably have the right experience before you start buying. Are you getting it? So if this has to continue going to the upside, are you getting it? Now, this is a lower low, lower high. Now we had a double bottom. I need this guy to, change character to the upside and turn this area to demand for me before I can start buying to go to the upside. But why will not even buy this kind of sluggish movement, even though today is massively bullish, is because I want my major touches. If it does not come here, I will not buy it. Trust me, except it gives me something and tells me that, okay, I'm coming down here, and it's switching and changing character on the 1 hourly sharp around these areas for me to be able to convince again that when this market is coming to the downside, it's going to change again for me to enter. and I'm saying my, what's it called? And I'm saying my oversold condition on my RSI, my major competency, before I can start doing buying this market to the upside. So I don't disobey. Once any of my 5 conferences are not in play, I would not do it. I would not buy. So according to GBPUSD, whatever I'm saying is this one, this second structure. I get in third touch. So it's giving me a market manipulation. I'm not going to use trend line or use support and resistance here. I have seen this kind of structures before. And what is in that structure? It's a structure that after doing this manipulation that I did to the upside, that failed. Are you getting it? Coming down. Are you getting it? Coming down, it has to do something like, market manipulation, taking the buyers and sellers out again, then taking liquidities before finding a switch around this area to buy this market back to the upside. So aside from my confluences and every other thing I do, I call myself a market structure trader because I find the waves, I try to find the waves the market using moving, follow the money. I try to follow the money before I take my trades. So I cannot buy from these areas because my quality doesn't return. I'm not seeing any structure. It's not aligning with any of my structure to me. So I think we are still going to come down because we have to do a manipulation concept. I get around this area before going up. Then releasing everybody at the top, releasing everybody at the bottom before even taking any major move again. This is how I know how the market moves. I guess the rain is falling, so definitely might be a distraction to this video. I don't know. So I think it will be so. This is what I am saying on GBPUSD. And if I can, definitely try on that video. Okay. If I can pull the monthly chart of the EURUSD off, the reason a lot of people might be buying also is because this was a major support since February 2015. 2015. Since February 2015, we had a support, monthly support. We have a monthly support that broke the upside. I get me. So if this is holding as a monthly support, I get me. That means we are buying back to this major resistance zone. The monthly and all this will become what liquidity. Yes, so you have to go to your higher time frames, first of all, and predict thousands of pips into the future. You have to drive your monthly time frame. So, because why I'm saying that this might be an uptrend without the liquidity, the only reason I'm going to accept the uptrend that is happening right now on EURUSD without this liquidity concept is because I know that previously, I've been looking at the monthly. You see that I drew it down. I didn't even come to this place. I've drawn it down, knowing that this is a very, very, very big monthly demand zones. So if it's a monthly demand zone, what happened last month? Last month, we had a doji, an indecision. An indecision is a kind of exhaustion between buyers and sellers. Are you getting it? So this is a doji that happened between buyers and sellers. So if this month becomes green, I guess if we can form an evening, a morning star, a huge morning star on a monthly, you don't even have to come to this extent first. This month don't even have to come to this extent first. I believe that as a trader, as a market structure trader, and what I've learned, a morning star just have to pass 50% of the body of this body. So the moment this month is closing above 1.700, I get in it. I consider this a morning star, and the next month gives me another morning star, as in another green candle again. I know I'll start buying from there. So there are a lot of things I put into consideration before taking my market. But is this what the market wants to do? The monthly cannot tell you. You have to drop lower to the lower time frame to find out what the market structure is really doing before you can take a decision. Right now, the weekly is going to close today. It's about closing today. So this is a bullish what's it called, move, because for the past since September, we have been what consolidating. We have how many weeks of consolidation? 1, 2, 3, 4, 5 weeks of consolidation before we're pumping this week right now. So I'm not going to believe for the first jump. In life, they say no one makes, psychologically, they say no one makes the first jump. So I'm not going to believe on this first jump until it gives me something as in a trending wave or a trending structure, giving me these, different cycles before I will know that, okay, this is actually a fake out and the market actually going back to, demand. Are you getting it? And is buying back again. And if we are buying back according to weekly structure and you started buying from here, are you getting it? Or you are buying from here, know that this market is going to do what? Trend all the way from here to the upside. So if you are buying, you should know that your stop loss should be below here according to the weekly. Take your trade from the weekly and let that market run for you. Let it run from here 500 to 1600, then 1000 pips to the upside. So you can predict 1000 pips to the upside because this is where the market is actually broke out from. So if this market is going to hold this monthly or weekly demands, I guess may hold this weekly or monthly demands, what's going to happen? It's going to trend back to this area. So you should be looking for only buys when you are started seeing your trends, your waves and every other market structure and every other thing. So I just wanted to show you how to look at the market before you jump in. I guess before you jump in, this is how I look at the market, and it has helped me a lot. I guess so. This is the only reason I might start buying gold. I still need what? A change of character back to the upside on my lower time frames, probably my quality time frame. I still need what? A change of character on my quality time frame before I'll start buying. Because as it stands, I taught you something called connecting the dots. Connecting what? The dots. Connecting the dots. This is my first touch. I guess it is my first lower high. This is my second, my third. I'm getting my fourth one right now. I guess it. Then on the downside, I shall just get able to touch everywhere. On the downside, this was my first one, my second one, my third one, and I have what? An ascending triangle with the last low in this one. This was my last lower high. I guess it. So I put a lot of things in play before I consider this the bullish market, because if truly that was it, this was the last lower high we had, lower low, had another lower high, then lower low, had lower high. Sorry, the last low we had, so we had a lower high, got a lower low, but we'll go to the upside with this. I get him higher high, higher low, higher high, higher low. Now bring on that higher high before we get to this particular, zones. As it stands right now, what is it telling me? Until this breaks to the upside, I am not buying. Even though it breaks, it needs to switch and take all these liquidities concept out. Take this as liquidity concept. After taking it, then come back to the major demand zones and start buying. Anything that makes that demand zone break, anything that makes this demand zone that is going to form according to market structure breaks to the downside and turn into what's it called? It's going to come and take this out. So there are a lot of things I would consider, even though I'm in a trade. Once I see all these structures, market structure happening that I just described to you right now, let me come again. If it must break to the upside, take this structure out for me. I guess it. After taking it out, or even turning to equal highs, then come back down, then take it out for me. After taking it out, I know that we have a change of character that's happened. Then come back and turn this area to a demand zone, major demand zone. Then I'll even go back to my 15 minutes, 30 minutes, or 1 hour time frame to find a switch here before I can enter, change of character, because whether I like it or this is a downtrend, these are not trend. There's something that it will show you a switch before you can do that, before you can find your entry. So your entries are in this area. The moment you are breaking that structure to the downside, trust me, if you are in this trade, you are breaking structure to the downside. This is your stop loss. Leave that market. Leave that market. We are closing in forward candle below this demand zones. Leave that market. Don't try to extend your market. That should tell you that this was actually what in liquidity concepts by taking everybody at the top side, then coming to take everybody. If this place does not hold, it will come and take this guy out. So I don't know how to, put it to you that you understand that you have to follow the market makers and the smart money and how they think before you can trade. I guess before you can make money in this market, because if you are looking at just your support and resistance without looking at liquidity concepts, if you go and look for any of my video, I think I did a gold market manipulation, market manipulation liquidity concept. I did a liquidity concept. So I'm teaching you a liquidity concept right now. This is supposed to be just a run through of what is happening in the market. While I'm talking too much, I'm even turning it into a trading section as we speak right now. I guess as we speak right now. So this is what I look at. I don't buy from my demand, my resistance zones or my supply zones. I buy from my demand zones. And I don't even like what I'm saying here. This is sluggish to me. I don't like it. So this just might be and today is even Friday. Why should the market be buying on Friday when the gap can just come back on Monday? I guess it. You have to think, you have to think like the people that are really having this money. You have to think like the market makers. I get it. You have to think like the market makers before what you can actually do what buy. And what is this? If truly this is even a demand, look at, let's drive a little market. This was a higher high, higher low, higher high, higher low, higher high. This was the last higher high we had. So this is a change of character for you. I guess for a structure to break means that it has changed character to the downside. So anything that makes that structure to come back, we have to come back to the upside to a particular Fibonacci retracement zones, then fall to the downside. So where might we be going to if you are obeying your strategy? I guess it means that we'll definitely reverse from this area or this area. I guess in 850 area. I guess in it. And the last zone. So you have to look for, as long as you are still trading to the upside, until we break down to the downside, you're not supposed to be selling, except you are selling from these areas. And the area I'm saying the market coming back to is this 0.382 area, what's it called? 1.07607, 1.0800 area. Then sell to the downside to complete that liquidity concept I told you about, because we broke from what? An ascending triangle. So come back to this as a break of structure area. I get it. Then sell down, take all this liquidity first, then find a way to switch back to the upside. If you don't have all these things, guys, trust me, you'll make a lot of mistakes in this market. You'll make a lot of these mistakes in this market, because this market moves in waves, in cycles and waves. So it's not just about your support and resistance alone. It's about not just about your supply and demands alone. It's about learning the waves and how this market, as in this market makers using manipulating, even after you doing all your proper analysis and you have a very, very good market. Definitely, if you are a greedy human being, you will now start taking higher lots because you've made higher money. They have a way of taking all the money you've made over the week or over the years away from you. So you have to put in a lot of work, a lot of psychological balance, and focus. Most important thing, focus into it before. But I'm telling you that as long as this liquidity was taken, this market has to drive up to the upside, then come back again to the downside before going to the upside. So to me, this is for EURUSD and GBPUSD I've given you right now. I'm going to transfer that to gold. And where is gold? This is gold on the weekly chart. And to me, these are all $2,000 is a psychological area, and this whole area are what? Resistance zone. If I have not bought from here, I will not be buying. This is the reason why I bought from. They say you buy from demand and you sell from supplies, right? Buy from demand, sell from supplies. That's the major thing they tell you when you are learning trading. The first week or the first month of trading, buy from demand, sell from resistance. Buy from buy from support, sell from resistance. then buy from demand, sell at supplies. I think, and I still believe that $2,000 is a resistance zone or a psychological resistance zone, and we are there right now. If I'm not buying from here, why should I be buying from here? That's insane for me to do. So I would just take like, okay, on my weekly time frame, $2,000 is my resistance zone. So the market just needs to do what? Come down a bit, at least halfway line. To me, that's what I think. Halfway line. Then before you can continue going to the upside. So 1,000 minus, what's it called? 2,000 minus 1,800 is about 1,900 or 1,900. If you calculate this, you see it. So you can't see it right now like this, but I'm just showing you that I first of all go to my higher time frames to envision that I'm buying from here and we'll be doing an ABC move to the downside. You followed us up very well from all our analysis we've been doing. We've been talking about moving up to this extent, then doing an ABC move. We talked about a lot of things. So I just don't want to buy from my resistance. So I will drop down to my lower time frame, maybe probably my daily, to see what is happening in my daily. My daily right now, I'm saying that we've changed character back to the upside from here because this was what? Our high. They were brought in a lower low because of this change of character, then the lower high, the lower low, then lower high. Are you getting it? Then we put in a lower low again. So for us breaking above this, we've done what? Change character to the upside. Are you getting it? I believe we change character to the upside with this. So what happens next if we change character to the upside? The market has to find a way of doing a retracement before doing what? Going to the upside. And that's where your Fibonacci does what? Retracement tools comes in. Are you getting it? If we're reversing from there, that means we're coming back to 0.38 to remember after every change of character, what happens? The market has to come back to a particular Fibonacci retracement zones before continuing to the upside. The market can't just go straight like that. That's why you see that the market moves in this world, waves. And bring your price action sense in. What are you seeing here? The greens are more than what? The reds. Are you getting it? The greens are more than the reds. That's if you bring all your, all your waves in and your major areas of value. Those are major areas of value. This was a major area that we broke to the upside, we tested. So definitely we should come back to those demand and those support zones, those your support zones before you start buying again, not buying from the middle. Wait for your major or daily or weekly or monthly demand zones or your areas of value where your support and resistance meets. Buy, put your risk to it and leave the market to run to the next resistance zones. And we are the resistance zones, these areas. But if you are not in the market already, wait for the waves to happen. Now you are saying this, you don't know what to do next. Wait for this market to at least give you a discount entry before you enter and continue to the upside. That brings us down to, finding those waves. And those waves are found on the lower time frame. Are you getting it? This was the last high we had. We are not supposed to break this if we should continue this market to what? To the upside, to the downside. You're not supposed to break this to the upside. So to me, this is a change of character, and the market is in what? Trending very, very well right now. So this was a break of structure to the upside. Are you getting it? This is the last low we had. Are you getting it? So in these areas, what should you do even as a swing trader? What should you do? Buy from your support and resistance, right? Buy from your support and resistance. So I don't want to buy from this area because we put in a lower low, higher low, then on that higher high. Are you getting on that higher low? On that, it should give me on that higher high before I can take another. If I'm not buying, if I've not bought from 1973 area, are you getting it? I should be what? I should not be buying from this area. It's as simple as that. Even your lower time frames are trending perfectly well from you. I don't drop less than the 4-hourly time frame to buy or sell in my as a swing trader because I hate what? Noise. Noise are in the lower time frames. There are too much noise on the lower time frame where I can't even use my lower time frame to determine that this is going to break to the upside. Are you getting now? We're going to come down. No, I just want to trend my 4-hourly time frame. So that because that's where I see my structure built perfectly well. So right now, would you want to buy from this area or you want to sell? I just think this is a liquidity concept because whatever is happening here right now, this has to continue to the upside, continue breaking before I can even buy or do a daily trade again, because we are what? Connecting the dots. We are trending to the upside. We are still trending to the upside. So it's not yet time to do what? To sell, except it shows you the market structure. Are you getting it? And what's the market structure I'm looking for right now? This gold market. I'm looking for something. What's the price action pattern? This was the last low we had. Are you getting it? This was the last high we had. Are you getting it? So we are in this zone right now. So whatever I want is just, to continue breaking to the upside, or, fail and form what? A head and shoulders pattern in this area. Then I'll take this, wave, this next phase to this downside. Take it to the downside. I can take it the wave to this area, or take maybe just my 200 pips and don't be greedy. Are you getting it? Take it if I'm selling, but that's trading against what? The trend. That's stupid. Wait. The trend is what? Your friend. So unless it continues to the, to the upside, except if you are saying that it's claim, and you know in your head already that definitely what? Let me bring that guy back. Hold on. If this was the last low, and we are doing a head and shoulders pattern as all those what's it called? Market structure, price action trader, and this is the face. Is that the daily face, or are we reversing from there to the downside? Is that where it's coming to? Look at. I guess, and so we might be stopping here. They continue this market to the upside, but before I will even sell, I need this market to do a switch to the downside for me first. Without a change of character, I will not enter a sell, because this market is still what? Bullish. We are still bullish because the market is still what? Trending to the upside, and we are finding the trend. So you assuming that a head and shoulder pattern is supposed to happen here, that's stupid. Wait for your markets, your price action or your chart patterns to form before you trade as a chart pattern trader. And you have to look at your entire market before you do trade, because if you have to look at everything before you do a trade, if you bring all your confluences in, it was clean for you. This was a descending channel. Are you getting it? There is a continuation pattern to the upside that is broken right now to continue to the upside. So I'm waiting for a discount entry, and I don't want to buy from my major resistance zones. I want a discount. Please give me a discount before I can start buying, or give me a retracement before I can start buying. If you continue extending like this and I'm not in any trade already, this area, I don't want to buy, because that's why I'm supposed to even know that I'm supposed to start buying from $1,800 area. Are you getting it? That's how to trade. Wait for your support. Even though you are a day trader, still don't trade. Wait for your major support, daily support, or your weekly support, or your monthly support to buy. Then your full hourly structures are still cool to trade also. Are you getting it? That's why I'm not even in this market. I cannot day trade, because I'm not seeing any opportunity according to my strategy to buy, except probably I would have been knowing that this is a break of structure. Are you getting it? I'm buying from these areas to just take probably 200 pips to 1,700. This is 1,970 to 1,990. I guess, or 2,000, then leave again to know what's going to happen. Because definitely, I bring the weekly in, you should know that $2,000 is a huge psychological zone and resistance zone, even though we say our weeks at the top. And I strongly believe that for this to hold, I guess in it, and we are seeing a bullish phase from the entire structure. I guess in it, we are seeing a bullish phase from the entire structure. We are coming to take all these weeks out in this run, because this is the next. I guess in it, you just have to study the market. You need at least 1 year to be able to acquire all this knowledge I've been putting out there. Let's go to Bitcoin. I guess it. Bitcoin. What I'm saying in Bitcoin, there are a lot of things I'm saying in Bitcoin. But right now, I'll just connect my dots on my daily. And if I connect my dots, these are what I'm saying on Bitcoin on the daily. I get it. I'm saying an ascending channel on Bitcoin on daily. And if I should drive that, first of all, bring every other thing out again. And first of all, we had a lower high, a lower low, lower high. We had on that lower low. I get it. So this is still a lower high until we change and broke this market to the upside. I get it. So to me, a change of character happened here. I get it. So the change of character happened there to the upside. Then what happens after the change of character happened? We retrace and entered from our market in this area. I guess, and that's where we started buying from. We bought from here. I guess we bought from here. Position trading, cryptos. We also bought from here. Now let me connect all these dots for you. I guess let me connect all these dots for you. That was a lower high. Let me connect all these dots to form something very, very, very important, very, very sweet for you. What do you see there? At the end of the day, we had what? A break of structure to the upside with a head and shoulders pattern that broke to the upside. We tested, meaning that the market is what? Massively what? Bullish. And since then, we have been what? Trending to the upside. We're trending to the upside. So right now, a break of structure has done what happened until I see a retracement. Should I be buying from here? No, I should not be buying from there. I've seen that the market has broken structure to the upside. So I need a retracement back to demand zones or Fibonacci retracement zones. And these are the zones I want to buy from. So these are my major supports I want to buy from. I guess these are my major supports I want to buy from, or my major demand zones I want to buy from. So there's a difference between support and demand. These are demand zones because these are where the market took orders from to break the structure. I guess so. If you have not been involved, you should have known that immediately we broke and changed character to the upside around these areas because this market was in a bearish phase to continue to the downside. But instead, it did not continue to the downside. It actually switched to the upside and we tested for you to enter to change the character or change the structure to the upside to continue breaking structure and continue trending to the upside. This is how your market actually does what moves. So what do you do as a market structure trader? Are you supposed to buy from after the market has put in an impulse? No, you are supposed to what? Wait for a major retracement, then buy again. If you buy, you put your stop loss below 24,000 and you buy for probably 28,000 or even 30,000, what's it called? Now, this was another shot, what's it called? If you're a supporter and a resistance trader, this was a previous resistance that has now broken to the upside. I guess so. You can buy from these areas or buy from this major trendline support. Depends. But you should not even be buying. The market will tell you on the lower time frame that I have switched to the upside before you start buying. How? We did it here. And we did it here. Let me expand. We did it here. We did it here for you. I guess the market, after taking this liquidity, was the last lower high we had. We came back to the downside. We couldn't break to the downside. So for you to see this switch around here, you're supposed to be buying. So you can buy from here because it corresponded with your demand zone. So if you have not bought from here, you're supposed to be buying from here. Now is another major buy again. So are we coming back to demand or we are coming back to support, now turn resistance, now turn support to buy again? So without that, I'm not buying. I will not buy blindly. I guess since I'm buying, I want to buy from my major support or demand zones. I don't want to buy from my resistance zones. I guess I don't want to buy from my resistance zone. So these were your trades entry. Buy from here, sell, buy again, sell, buy again. I guess sell, buy again, sell. Or 1, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4, 5. That's the wave the market using the word moving. So until a support breaks to the downside, changing character to the downside, retracing and testing a 0.38 to a 0.5 retracement level, then you can start selling. If you follow up the market like this, you will not make mistakes. Put a proper risk and money management to it, you will not make mistakes. But as it stands right now, do you even know that Bitcoin is now what massively bullish until $25,000 breaks to the downside? The wave have switched to the being bullish. So if you are in a trade for $25,000, I don't see a reason why you should be scared about even taking profit when you know that Bitcoin is in a bullish phase already. When you know that Bitcoin is what in a bullish phase already. So Bitcoin has switched and changed character to the upside. Ignore whatever you are saying here. Ignore whatever you are saying here. Bitcoin is trending to the upside already. So as long as $25,000 is not breaking to the downside, and you have the patience to wait for months, are you getting it? Definitely, you are eligible to make a lot of money, because I was waiting for this major to enter massively. Go and look for my June, what's it called? I said I was going to take a massive buy from here, and now we're $10,000 or $9,300 in serious profit already. Are you getting? So 10x, you know that you are $90,000 profit. If you have one Bitcoin and you are using 10x, you're probably on the Binance or the OKS or any other exchange you're calling it. So how do you look at your market? Why do I have confidence of leaving my trade to run for a very long time? That's because I have known that this is the market that switched to the upside and probably brought in something called what? A copper handle pattern. And what is a copper handle pattern? The copper handle pattern is a bullish continuation pattern in any market, in the financial market, and the target is what? The target is coming back to $44,000 to $48,000 high. Are you getting it? And if I bring that, does it correspond with the entire, what's it called, move? This was the entire bearish movement. Are you getting it? So it has to come back to at least 50% of that movement since the market has switched to the upside. It has to come back to at least $42,000 or $48,000 before we can even say that, okay, we're coming back to $25,000 to break it to, you know, be bearish. Or we can just from there come back to these areas or these kill zones. They come back and turn these old areas, are you getting it, to demand zones again, which is at $30,000, and even come and from $30,000 buy all the way back to form a new high or back to $70,000. That's $40,000 in profit. Are you getting it? Come back to $70,000, $60,000. Let me just say $70,000. You know, $40,000, 10x, $200,000. Are you getting it? Profit if you have one Bitcoin, which is $30,000. So 10x, put your proper risk to reward to it. 5x, put your proper risk to reward to it. 3x, put your proper risk to reward to it. As a position trader, I use 3x. Are you getting it? Are you getting it? 3x. So this is how the market does what trend, because if at the end of the day it's going to trend that way, that means it's going to do what? It's going to trend that way. That means it's going to do what? Come all the way back to what we just discussed in EURUSD just now. Come all the way back to, if it's going to break to the upside, trust me, this is a concept. This is the what's it called? The waves. It's going to come back all the way to these areas. Are you getting it? Form an equal high at 48,000. They do a retracement of 0.5 to the downside, then break it. Are you getting it? Break it. Then come back and turn this whole area to demand zones. As long as we're not breaking that demand zones, trust me, the market will buy from these whole areas straight and come and break or come to equal highs to $70,000 back. How much is that? Even though it takes months, would you be able to make that money in any business around the world, depending on your capital you're putting in? No, that's why they say that the financial market is one of the most, profitable markets in the world these days, because more than $5 to $7 trillion flow through this entire market daily. So I just want to be a trader. I guess, and I want to be a trader. Let's check NASDAQ. I guess, and that's why, that's why I did everything I can to make sure that I study every aspect of, being a very good trader for years. Now, what is happening? The market did what? Actually did was switch to the upside from here on a daily. This was a double bottom. This was a low. Are you getting it? We did a switch, change your character back to the upside, turn here to demand. And since then, we have been seriously what? Bullish. So even this that is happening right now is a minor, retracement back to the upside. So NASDAQ is definitely doing what? Coming back to the upside. So NASDAQ is still bullish. So I just want to find my demand entries and buy. And according to what is happening here, I guess in it, I see, I think I talked about NASDAQ doing a liquidity concept. I don't know. Maybe it's in one of my videos. So to me, this is a liquidity concept. And NASDAQ put up here this liquidity after taking everybody out. You know, liquidity. Liquidity is just everywhere. They find a way, liquidity, they find a way of taking most people that were in this market that put a buy here, a buy or a buy here, take them out first. Are you getting it? Before continuing this market to the upside. And what are you saying? How many days of serious green candles that you cannot even find any elsewhere? That's telling you that this market, even this resistance will not hold. This resistance trend line will not hold. Are you getting it? To not hold because it has taken liquidity right now. All it just needed to do when it got exhausted in these areas was know what, find a bullish continuation pattern, take everybody out. Are you getting it? So if you have not buying NASDAQ from these areas, you're on a long term right now. See what is happening. NASDAQ is coming back to do another 14,000 dollar area to 15,000. I think I did this video that we are coming back to those areas. We are doing a retracement, back to the downside. Are you getting it? Because of this massive bullishness, there was massive bullishness from this. This move was seriously massive, all the way from 11,700 to $16,000 or 15,000 something. How many thousand pips into the future if you're a NASDAQ trader? This is money. Even though you are even using a one lot from March all the way to July. That's about 4 months. You know how much is that as a NASDAQ trader? People are looking for just 200 pips in NASDAQ, just for 15,100 to 15,200 on NASDAQ. Now we can, predict a lot of 1,000 pips into the future. I think I have a video on this where I was looking for a way for NASDAQ to continue. So I've got the liquidity right now. A lot of people are still scared after this liquidity. They don't know that they will have to break structure to the downside, take liquidity, recover that area. Now, even though we remove this liquidity concept, bring in your supply and demand. Bring your supply and demand in this area. This was the last demand we had here. Are you getting it? Even though you don't know how to do liquidity, this was the last demand we had here. We've broken that demand to the upside right now. So you are supposed to be buying. This was a fake out. Are you getting it? So right now, this is a good demand area, or it might not even come back down again. This might not even be a better, a huge, coming. Liquidity at the top, it will take it, since it has taken at the one at the bottom, and yes, and it has taken the one at the bottom to take it and see, look at the price. This is what price is doing. 1, 2, 3, good serious day of bullishness, and it's not even slowing down. Why do you want to sell? Why are you even selling in a bullish market? I thought they said the trend is your friend. So a lot of things you put in check before you can even, and your Fibonacci will even give you an entry also. Your Fibonacci will give you an entry because it was the last low had, higher high, higher low. This was the last higher low had. This was an entry. Look what Fibonacci did. 0.382, give you an entry. But because you don't know how to use your Fibonacci tools, you are making mistakes in your trading. This is where I want to buy from. Put my stop loss underneath here. I get it if I can trade, or probably I am on a lower time frame looking for what? Reversals on maybe my 1 hour time frame or my 30 minutes time frame in this sort of areas. It will not lie to you to show you. Look at this is my 1 hourly chart. This was the last low had, a lower low had, last lower high we had. We came back. I guess what did the market do? It got exhausted in this area. The sellers got exhausted in this area. Last low, what happened? We came back sluggishly. We switched with a what? We switched. Let me show you. Last low we had, right? We switched with a price action pattern. Look at. We even switched with a price action pattern. The market would definitely do was switch with a price action or a chart pattern for you. And what is this? This is a bullish reversal chart pattern that has broken. So for you to not even enter 0.382 entry, you should know that to come and touch the 0.382 line. So this is where I'm waiting for to do what? To enter. So immediately we are breaking out. Breakout traders, immediately we are breaking out. You know you have entering from here. Your stop loss is what? Underneath the last low, because this was how the market trended and broke out. Are you getting? So enter, put your stop loss below here. Are you getting? How many thousand pips? 400 to 400. That's about, let me just say 454. Let me just say 200 pips to the downside. 200 pips stop loss. Right now, what has the market done? 400. We are 15,100. 400. Well, let me just even say 500 safe. 14,500. Are you getting it? So 15,100, 600 pips right now. And the market is what? Back in action. Back in action, knowing that year will not even hold because the market is what? It's going to break all these guys, break all their wings to the upside, according to your what you have on your higher time frame. Break all these guys to the upside. Are you getting it? Break them, forming a bigger change of character, retracing back, doing a retracement, then find another entry again to continue on to the upside. This is how this market, trust me, these are the market trends. You have to have all these things in your head. So I just wanted to do, a run through because I've done, what's it called, a run through of my, what I did yesterday, but I've ended up, doing a very, very huge, analysis video for you guys and even a training session already. I guess for you guys, the market will definitely show you whatever it wants to do. Even when we're even doing all this, it was showing you whatever it wants to do with what? All this, your price action patterns. I guess it was showing you everything it wants to do to price action pattern, double bottom. Market got exhausted now. We come here, we got exhausted and we switched. If you go to your lower time frame, it's definitely there. We switched to the upside from there. But you should know that there is a bearish pressure coming. Connect your dots. You have one, you have two. Are you getting it? You have three. Just draw it down. That's where your take profit is. This area, your take profit is from 14,800, 50,200, about 400 pips. 200 pips in this move is enough for you. When you knew that definitely this was the resistance zones. Are you getting it? Is enough for you. Then this was a switch also to the upside resistance zone. But as a trader in Vision X, what do? You are looking for your monthly, your weekly, your daily, your weekly, your daily, or your monthly what? You're looking for your weekly or monthly demands to buy wherever it's switching. See, it's showing you wherever it's switching to buy. But even I usually wait for what? The daily price action pattern to complete, and knowing and having in my head already that, okay, since the market got exhausted, the market needs to, accumulate, pass through an accumulation phase, pass through a max spin, accumulation, look at now, accumulation, spring, max spin, go. Are you getting? So there are a lot of things I've studied, a lot, trust me, a lot of things I've studied in this market that before I take a buy as a swing trader and decide to be a swing trader, not just a day trader, is because I've seen, see, this market will break you. Everything, it will teach you discipline, to teach you, just mention the word. Are you getting it? To teach you everything needs to teach you to be a better person in life and even a better trader. Patience, perseverance, to break you, to make you, to teach you focus, to teach you balance psychology. I don't have all the words here right now, but definitely you've seen me using all those words that the market will teach you. Apply that to your life. You see that you're doing perfectly well because this is money. If I bought from here and let this continue running to $16,000 or even a new high, are you getting it? And leave this market to run from here. That is a very, very a very, very huge risk to reward ratio. Because this from here, even though I'm using a 1,000 pips, this is still a 4 risk to reward ratio because I'll be buying all the way from 14,300 or 14,400 or 14,500 all the way back to where? NASDAQ, all the way back to here, coming, all the way back to $16,500 area, all the way from 14,500. That's 2,000 or 20,000 pips on NASDAQ if you're a NASDAQ trader. Are you getting? This is what I'm seeing on NASDAQ right now. This is a very, very, very good trade that will take us from maybe from November to December all the way to what? January. Are you getting it? Right now. And 2,000 pips on NASDAQ is not a shy split. You understand? It's not a shy split. Where is that? What's it called? Let me bring a tool in. Sorry, price range. From here, how many thousand pips? 24,000 pips. Is it 24,000? Sorry, 2,400 pips to the upside from where we are right now. I guess from here the market, will actually switch from after taking out this liquidity and bringing up, good price action, 2,400 pips. One lot, you know how much is one lot on NASDAQ? I guess in it. One lot on NASDAQ. If you can even do a final calculation using my OctaFX profit calculator. Thank you, OctaFX, for providing this OctaFX profit calculator for us. I guess in it. Thank you very much. Let me use a profit calculator on NASDAQ. I guess let me use a profit calculator on this NASDAQ and end this video here. So NAS, where are you? NAS 100 from 14,000. Sorry, I'm buying. So buying from open price 14,500 to 16,500, 16,500 new high, which I know will pass that. Let me just say, is this 16,500? $16,500. Okay, let me just use that. 16,500. Buy one lot, $20,000. 10 lots. That's too much. 200,000. I can't even take that risk on NASDAQ. So the movement, I think probably 5 lots on NASDAQ. At least this, you make this in 1 year, even though it's 1 year right now. I get it. You not do anything, all you just use that you used about if I can bring in the what's it called, trading calculator. How much profit do you need to enter this trade on NASDAQ? 5 lots on NASDAQ. How much do you need to enter this trade on NASDAQ? You need at least $15,000 to enter this trade. So if you have $100,000 account and in the next 1, 2, 3 months you are making on that $100,000, it's not a bad investment. Even though it's a 6 months term, you're making 100% of your money in 6 months. It's not a bad term. It's not a bad investment. I guess because as it stands, I'm not seeing NASDAQ coming down again because we are still in a massive uptrend on NASDAQ. NASDAQ is still in a massive uptrend as it stands. I guess because we've done with the liquidity concepts. I guess we've done with the liquidity concept already. Now NASDAQ is continuous trend to the upside. So how do you look at your market? Trust me, we're doing well at Vision X. Trust me, we're doing well at Vision X. We don't have any, even though we don't have anything right now. Trading is a long-term goal, not a short-term goal. It's not a get-rich-quick scheme. So no matter where you are right now, think about your next 1,000 trades, not just this one trade. This is where I'll stop for today. Take care and bye. Bye.